It's got some great data from our Bob Pisani. There's a 10% chance of another 20% increase in the markets this year. So kind of slim chances there. Give us a sense. How do you view the start of this year?
So I think I view the start of this year, one, looking at some of the risk factors that are probably going to follow us into this year from last year. So Bob Pisani was just mentioning interest rates, and then that's one thing we're obviously looking at. The uncertainty of the Fed's policy is another thing to look at. Also, looking at inflation, that's still an area where I think from an economic standpoint, we want to see that trend continue, especially from a consumer standpoint. And then lastly, the actual global economic slowdown, which I think at this point I expect it's fairly baked in that most people are expecting us to have some sort of slowdown here in the middle or anywhere at the beginning of this year. So I think those are some of the factors I've looked at, and it still begs the question is how companies are going to do, and I still think we will see some sort of positive return on the year.
All right, there we go. That's your full year outlook. I want to focus and narrow into today. Give us your WEX word of the day. How do you see today shaping up?
Today, I think we trade. The futures are looking relatively flat. I don't think it's a relatively exciting day today. I think traders will be on the sideline and we'll have a flat day. For January, for the rest of the year, I think we'll see some of the Magnificent Seven that we've seen kind of really push the market forward, kind of take a little bit of breather and more of a broadening out of kind of, the rest of the market that's going to be pushing us forward.
All right, and also, Delano, what's your WEX word of the day?
Just slipped it out, but the WEX word of the day, Frank, is going to be broadening. I do think we have more companies and more industries join the rally. I do think we see, again, a positive return, not to the tune of 20% gain that we saw in 2023, but we do see some sort of positive return in 2024, especially when you can look at the lowered expectations with a slowdown be imminent, more than likely. Companies and management are able to lower those expectations and hopefully exceed them when we see that earnings come out in February, March timeframe.
All right, so on that theme of broadening, I want to ask you about something. We just got something that kind of crossed the wires right now. Barclays actually downgrading Apple, expressing a little bit of doubt in this Magnificent Seven trade. What's your view specifically on the Magnificent Seven trade? Again, Barclays downgrading Apple, the most widely held stock in the market.
Yeah, I think the Magnificent Seven, again, drove the rally in 2023. I think you probably see now that they're trading, roughly at fair value. So I think you see some investors take some chips off the table, some investors take profits, especially to start the year. That's a good time for them. You probably saw a little bit of that happen or should have seen a little bit of happening towards the end of 2023. But you're going to see that more in the beginning of the year, especially for the Magnificent Seven. I don't think that means that they have a bad year in 2024. I do still think they end up positively, especially with the rest of the broadening out, pushing out the market forward. But I think profits can be taken here, especially for those that were riding the Magnificent Seven since the end of October, where we saw the large rally, comeback rally to end the year.
All right, Apple shares down more than 1% following that downgrade by Barclays. I want to get to your pick. So you didn't come to us with a single pick. You came to us with a sector, healthcare, one of the laggards last year, pretty much flat last year. We look a little bit deeper into the sector. About half the stocks were positive, about half were negative. What's making you so bullish on healthcare in 2024?
Yeah, exactly what you mentioned, and just where they're trading right now. Currently, you've seen everything from a standpoint, the S&P kind of doing well. And then if you look at healthcare, some names and just the sector in general not trading as well as I think it could be. And I think there's value play there for investors, especially if we see some sort of economic slowdown in the middle of the year. Those are obviously usually areas where investors can hide out and really get some value there. So I look at healthcare, I look at some of the small cap as opportunities for investors if they're looking for a trade that has some value at this point.